Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to this special edition of our Standard Chartered Money Insights mini-series covering different topics relating to the 2022 investment outlook. Today we are focusing on our second structural investment theme of embracing a digital future. My name is Steve Brice, the bank's Chief Investment Officer, and I'm delighted to have Marco Iachini, part of our thematic strategy team and a cross-asset strategist, to talk about our Embracing a Digital Future theme. Okay, enough of the introductions. Marco, can you explain to us what you mean by embracing a digital future and why this is a key feature of our 2022 outlook?
Hi, Steve. Glad to be back. So, in our view, the accelerating pace of technological innovation and the velocity of disruption is transforming the world at an exponential pace. And it's blurring the lines between the physical, digital, and the industrial spheres. So we believe that this transformation will offer attractive multi-year investment opportunities. But why do we think it matters? Well, improvements in computing power and data availability are fueling innovations in many areas in our view. Within this, we expect three trends to propel this digital transformation. One, the increase in connectivity. Two, the exponential rise in data creation. And three, the increased penetration of automation in the way businesses operate. So then we may ask ourselves, what does this mean for investors? Well, as with previous technological revolutions, we expect there will be winners and losers. We believe that the Internet of Things and 5G, cybersecurity, the financial technology, and blockchain solutions are the sectors and industries that will disproportionately benefit from these technological innovation trends. So we would consider adding exposure to these areas within a diversified asset allocation in order to capture potentially outsized performance in 2022, but also over a multi-year horizon.
Okay, so before we jump into the key investment opportunities, can you elaborate a bit more on the three trends you mentioned that in your view should underpin growth in these opportunities?
Absolutely. Let's start with connectivity. With the number of connected devices globally set to exceed 11 billion, the Internet of Things theme is likely to remain one of the key focus areas for businesses. And specifically, large-scale industrial automation represents one of the best opportunity sets within IoT in our view. Then there's the exponential rise in data. The increasing number of smart devices will likely drive an exponential growth in data. And here some estimates point to a 3x growth by 2025. Imagine how that can translate to growth for certain companies that are fighting to gain market share here. So lots of opportunities. Moreover, machine learning and artificial intelligence can now be applied to large data sets to generate new insights and then enable better decision making. Therefore, companies able to convert this into actionable insights will likely have a competitive advantage in driving business performance, laying therefore the foundations for long-term success. And finally, we expect increasing penetration of automation technology. Once again, driven by the rapid adoption of IoT, but also due to a shortage of labor and a shift in consumer preferences, businesses are increasingly looking towards digitalization to help drive revenue growth and productivity. In fact, new technologies are expected to allow for greater optimization of manufacturing processes, helping to scale productivity and profit margins.
Okay, so you identified four areas within this that you see as interesting. I guess I would group these loosely in terms of, firstly, internet connectivity related, and more finance specific. So maybe if you can take us through the internet connectivity first.
So as I mentioned at the beginning, with any transformation, we expect there will be winners and losers, right? So the rapid acceleration in digital transformation across all industries helped sustain fast revenue growth across our technological innovation team so far. And in 2022, annual revenue growth estimates for this segment, so the technology segment, is set to remain elevated over 20+%. And overall, one more thing that I want to mention is that aggregate valuations generally trade at a premium versus global equities. But this is a premium that investors seem to be willing to accept for much higher earnings growth potential. So as you mentioned, there are four areas, or as we mentioned in this conversation, are four areas. The first two are 5G and Internet of Things and cybersecurity. So starting with 5G, this represents the fifth generation of wireless connectivity that enables faster, more stable, and more secure connectivity which is underpinning the potential of technologies around the Internet of Things theme. This ranges from, self-driving vehicles and smart grids to AI-enabled robots on factory floors. And it benefits from massive global fiscal tailwinds and private sector enthusiasm, if I may call it so. So here we see high and increasing earnings growth and growth revisions, and that should cushion somewhat pricier valuations. Next is cybersecurity. So cybercrime cost the world around $6 trillion in 2021 and will increase, according to some estimates, to 10.5 or 11 trillion annually by 2025. Also, the average total cost of a typical data breach has increased significantly already from 2020. This, in our view, shows the importance around preventing such attacks, and here both public and private sector are laser focused on improving security, thus increasing spending towards these solutions. For us then, cybersecurity firms represent an attractive opportunity.
Okay, that makes sense. So what about the finance elements of the theme that you like?
Sure. Well, first, there's financial technology, perhaps more commonly referred to as fintech. This encompasses companies that aim to leverage the use of technology to deliver financial services. One key and fast-growing area is that of embedded finance, where non-financial firms offer financial products or services within their websites or apps. Now, valuations for this segment of the four preferred areas for us is slightly higher than the others at about 30 times forward price earnings multiple. But these firms within the fintech segment tend to be a bit more cyclical and respond better to higher bond yields, thus giving us some comfort there. And lastly, blockchain solutions. We may view this as kind of a segment of fintech, but blockchain solutions can also be utilized outside of the financial services world, such as in gaming, e-commerce, security, and so forth. Now, technological leaps in distributed ledger technology, DLT, have supported the expansion of the digital assets ecosystem and fueled interest by various types of investors. The key takeaway here is that this technology can offer cheaper overhead costs, expanded cross-operability solutions, and enhanced security. But often investors mistake blockchain for crypto investments only. And in our view, it's much more than that. And there are a growing number of firms that are well positioned to capture this shift in our view.
Okay, thank you, Marco, for joining our conversation today and giving us such great insights. That is all that we have time for on this special edition of Standard Chartered Money Insights. If you'd like to learn more or read our publications, please visit our website at sc.com under Market Insights. And as a reminder, if you enjoyed our discussion, please rate and review us wherever you get your podcasts. Thank you for joining us. Enjoy the rest of your day and stay safe.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.